Australia's housing crisis may finally be starting to ease. Recent data shows a slowdown in home price increases and a significant softening in rent rises. But what does this mean for homeowners, buyers, and renters? Let's dive into the details. In September, property values increased by just 0.4%, following similar modest rises in the previous months. PropTrack's housing index was nearly flat, with a mere 0.04% increase. This indicates a cooling market, which could be a relief for potential buyers who have been struggling with skyrocketing prices. Interestingly, 4 capital cities saw a decline in dwelling prices for the September quarter. Melbourne's prices dropped by 1.1%, Canberra by 0.3%, Hobart by 0.4%, and Darwin by 0.7%. These declines suggest that the market is starting to balance out after a period of rapid growth. More homeowners are looking to sell, with new listings up by 3.2% compared to last year and 8.8% above the 5-year average for September. This increase in inventory is giving buyers more options and potentially more negotiating power. Tim Lawless, CoreLogic's research director, notes that this rise in real estate inventory is a seasonal trend, with spring and early summer being the busiest periods for selling. However, the flow of freshly advertised housing stock hasn't been this high at this time of the year since 2021. Sydney remains the most expensive city, with median dwelling prices up 29.2% since March 2020, reaching nearly $1.2 million. This makes it challenging for first-time buyers to enter the market, despite the recent slowdown in price increases. Perth, however, posted the largest increase in property values since the onset of COVID-19, with prices up almost 75% to nearly $800,000. This significant rise reflects the strong demand and limited supply in the region. The Reserve Bank has raised interest rates 13 times in the past 18 months, reaching a 13-year high of 4.35%. This has dampened some housing demand amid rising living costs, making it harder for people to afford mortgages. Auction figures also show a weakening in demand. The preliminary auction clearance rate dropped to 64.5% last week, the lowest since December 2022. This suggests that buyers are becoming more cautious and selective. Renters might find some relief as well. CoreLogic's National Rental Index rose by just 0.1% in the September quarter, the smallest increase in 4 years. This slowdown in rental demand may be partly due to a 19% decrease in migration from its peak in early 2023. The March quarter of 2024 saw 133,800 net overseas migrants arrive in Australia, 31,700 fewer than a year prior, helping to take some pressure off rental demand. This could be good news for renters who have been facing steep rent hikes. Despite these trends, PropTrack's senior economist Eleanor Create notes that national home prices are still up 5.88% from a year ago, and the market may continue to climb, albeit at a slower pace. July's tax cuts boosted borrowing capacities and buyers' budgets, motivating some to overcome affordability challenges and transact. As we move into the busier spring selling season, the housing market is expected to see further changes. Stay tuned for more updates on Australia's housing market. Don't forget to like, comment, and subscribe for more insights on the housing market and other economic trends.